Hey guys, it's Buzz Glover here from BizLoanConsultants.com. It's been a long time since I've put a new training video together for you to teach you more about the business of starting a commercial finance company and how to broker business loans. So I thought I would put this little video together for questions I get quite often on how the typical deal flow goes once you get a deal in-house and what you need to do with it. So I have this title slide here. It says typical equipment finance deal flow. I'm using equipment finance because that's where I have the majority of my experience, and it will give you a real good idea of what you need to go through as a business loan broker once a deal comes to you. So with that said, I worked up this little flow chart, and I realize it's difficult to see, so in the editing of this video I'm going to do some call outs and blow up the portion that I'm talking about. But so once again, this is for equipment finance. The reason that I always favored equipment finance is because it's a huge market. The last statistic I saw on it back in 2015 was about a $900 billion industry of equipment that's getting financed each year. Just to give you an example, if you go down any given street in your neighborhood or in your town and you look at almost any business, they're going to require some type of equipment, and in many cases it will be financed. I mean, just drive past a auto repair company. They probably have lifts, they have an alignment machine, they have they might have emission control systems. They might have point of purchase. And that's just one business. I mean, even if you go into an office building, they need cubicles and office furniture. They need computers. They need networking equipment. So my experience is always, most of my experience, probably 95% of all of the loans that I did were in equipment finance because the deals were more plentiful. And I also had some corporate experience in it prior to starting my own brokerage. So that's my reasoning, and that's the reason that I'm using this as an example. But once again, I'm finding out that students in my mastermind class and students who are just trying to learn this on their own always seem to get to a point where the deal comes in and they don't know what to do with it. So this little flow chart should help you out. So okay, so here's what happens. You get a call from a referral source saying, hey Buzz, I have a customer of mine that wants to finance this piece of construction equipment, for instance. And I've taught you in other videos, I always teach an annuity approach to this business. I think your best line of attack is creating referral partnerships. If you're going after equipment finance, that's typically going to be with people that sell equipment, but you can also get referrals from bankers who are turning down deals that are because their bank are declining deals. You can get them from CPAs, you can get them from attorneys, but the main line for getting equipment referrals will be from guys and girls who are out selling equipment, and they could be out selling computer equipment, they could be out selling office furniture, they could be out selling CNC machinery, they could be out selling mining equipment, they could be out selling solar energy. The opportunities are endless. I mean, you just take a look at all the things that are sold in this world, and any one of them can be financed. So, but anyways, you get this call from this referral source that you made friends with, and you told them all those great reasons that I taught you earlier of why they should be using you. And they say, hey Buzz, I got a deal for you. Can you call this customer? By the way, you already got the endorsement in the deals, which is wonderful. That's one of the reasons that I love teaching this way, is that an equipment sales person has already told the borrower that you'll be calling them to get the financing in order. So you get off the phone with that referral source and you call the borrower. When you get on the call with the borrower, you're going to have to start gathering information, and that's what's pretty cool about this business. You're basically just getting information off of one party, and then you're packaging it, and then you're sending it off to the bank of your choice. So But without me jumping ahead, you call the borrower. You already know a little bit about the deal from the referral source. They might tell you that it's a $50,000 piece of construction equipment, that it's a new machine. They'll fill you in a little bit, so you're not calling this borrower not knowing anything about it. But you call them and you get the remainder of the information. Once you get off the phone with the borrower, you typically, and this we're going to go to the next step here, you send the proposal with the credit app and an email to ask them for the remainder of the package. So this can get a little bit convoluted in the fact that if you are teaching your equipment vendor reps to quote a monthly payment on every deal, which is ideal, then the borrower will have already seen a monthly quote, and hopefully it's from you and your company because of that nice relationship that you formed with the referral source prior. But in the real world, many times it's the equipment salespeople are still reactive. The only time they're going to call you is when they have a customer that wants to finance, and the customer or the borrower will have not seen any monthly payment yet. So you get on the phone with the borrower and you tell them, hey, I'm going to get a proposal over to you based on the $50,000 purchase price that XY machinery vendor told me about. And I'll give you a couple options. I'll give you a 36, 48, and 60-month term monthly payment. Along with that proposal, I am going to send you over a credit application. And the nice thing about equipment finance deals is that typically up to $75,000, that's all the customer is going to need to fill out as a credit application. When the deals get over $75,000, on that phone call, and in the email that you send to that borrower, you would also have to ask them for additional information if the deal's over $75,000. Typically, it's their last 3 years' tax returns or audited financials, and possibly you're going to need the credit application, and you will need typically on that first email, that's pretty much it. You're going to need their tax returns and their credit application, and that's for deals, once again, that are over $75,000. Okay, so you send the proposal over to them, usually by email. You send them the credit application, and then the next step, you call the referral source to keep them in the loop. This is very important. As you are going through this, keep in mind at this point when a referral source sends you a deal, they're kind of at your mercy now to get this deal done and sold. So they're waiting on you to get the financing approved for their customer, and they want to be kept in the loop because they're going to make their commission once the deal is done. And it's up to you to make sure that you keep them informed of what is going on in the deal. Okay, so you get the referral, you call the borrower, you send the proposal to the borrower along with a credit application, and then you call the referral source to let them know, hey, I talked to the borrower, I sent them over the proposal. You just keep them in the loop on what's going on. Okay, now you follow up with the borrower. What if I sent over an email with the credit application and the proposal, and I didn't hear back from the borrower, say by the end of the following day, towards the end of that day, I might give them a call, say, hey, did you receive the proposal? How'd it look? What I'm saying is the follow-up. Don't wait 4 days to call this borrower, because first of all, you want to make sure they got the email, and second, you want to see where you are within the deal. Were they okay with the monthly payment? Was everything okay? And if everything was okay, just make sure that you get the credit application back from them, along with a signed off. There's a place on the proposal that they sign off, and you get a performance deposit. And this is where a lot of new brokers will break down. And to be brutally honest with you, the first couple years of me owning my brokerage, I did not get performance deposits. And what would happen is I would do all the work on the deal, and then the borrower would find somebody else and go through them. And there was no, they didn't have any skin in the game as far as being committed to you. So basically what I'm telling you is that if the borrower sends you a credit application and they agree to your monthly payment and they sign off on your proposal, you should get a performance deposit because it basically takes the deal off the street, and they know that they cannot go out and continue to shop it because they are committed to you at that point. Now, if you change the monthly payment and you go to a higher monthly payment because they have bad credit or something like that, then that performance deposit, you'll have to sell them a monthly payment and you'll have to regroup because you're not fulfilling your end of the bargain. But as long as they agreed to the monthly payment that you originally quoted to them, and they send you the credit application, I would always get one monthly payment as a performance deposit. Okay, so you get the credit app back and you get the remainder of the credit package. Once again, if it's a bigger deal, you are going to have to get more information from the borrower. You call the referral source once again, say, hey, look, they agreed to my monthly payment and we are moving forward. I have their credit application. Now I have to get, I got to get it into my underwriting. So you're keeping the referral source in the loop through the entire process. Okay, so now you get the credit application in, you got the signed off proposal, you have the performance deposit. Now you have to do a write-up for the lender. So what a write-up will include is everything about the deal. It's knowing the deal, I call it. You want to know what is the cash price of the deal, what term is the borrower looking for, what if there was any problem with the borrower that you knew of. Maybe they were turned down by a bank because they had a bankruptcy 5 or 6 years ago. Don't hide that in your write-up. You just put that in there. Hey, they had a bankruptcy 6 years ago. This was the reason that it happened, and this is how they got out of it, and they're doing well now. You want to tell them, you know, this company is a 20-year-old company, or however old the company is. In that write-up, you also want to put anything that machinery or that piece of equipment is going to do for the customer. You're going to let them know that, hey, they're replacing an old piece of equipment. They'll be able to be 50% more productive by getting this piece of equipment. Anything that it can save them money, provide them greater margins, or increase their sales. You want to include that in your write-up to the to the lender. So, and you don't want to hide anything from a lender. I was always very transparent with my lenders. You don't want them to find out about possibly that bankruptcy they had 5 years ago. So if they had some type of negative problem within their business over the past years that made them non-bankable with a traditional bank, I would always let my lenders know that I knew about it, and this is the reason why, and try to have a good story as to why they are creditworthy now. Okay, once again, you start calling. It says referral sources with the bullet points for your write-up. That should say lending sources. You're going to have a database of national and local and regional banks that will accept business that possibly other banks will not. It's something that you're going to build over time within your business. So you're going to get on the phone. You have this deal in house. You know that in this example that I've been using, it's $50,000. So you're going to know that you're going to have a number of application-only lenders. Ideally, you are going to have a relationship with a local or regional bank that you send a lot of your business to. That's if you're doing local or regional business. If you're doing national business, it'll be the same thing, but it'll be with a national funding source. And the way I like to view this is that it's almost as though you are an employee of that bank. They get all of your first looks, and in turn, they can provide some services to you as acting as kind of your back room, who will do a lot of the credit work for you. Not that you shouldn't know the credit on the deal, but in my case, for many years, there was 1 or 2, and actually 3 banks, because actually over the years I owned my business. These banks, I would migrate from one bank to another based on what was going on in the market, but and the way that relationship went was that by them getting first looked at my business, they had first opportunity at funding it. But on the same token, if the deals were not up to their credit standards, they wouldn't get mad at me for sending them bad deals. They knew that, hey, they're basically getting first look at all of my business, and the trade-off was that, you know, maybe half of, or maybe even a little bit more than half of them, they weren't willing to underwrite the credit on. So, but anyway, so when you start calling these funding sources, you're just going to talk to them about the bullet points on the deal. Hey, this is a 10-year-old company. This is a $50,000 deal. They're looking for a 36-month term. 5 years ago, they had a bankruptcy, but they're out of it. It's been satisfied, and this is the reason they went through the bankruptcy. You're not telling them the name of the company at this point because obviously you don't want anyone or any chance of them going out and poaching the deal. Not that too many funding sources will do this, but it does happen occasionally. But just tell them all the bullet points of the deal, and then lay out the question to the lender. Hey, is this a deal that you think would fit in your wheelhouse? And the lender will come back to you and say, yeah, this is something that I'd like to look at. Or there'll be something in there that you said that says, no, this won't work. If I used a different example and I said, hey, this is a 1-year-old business and the bank only accepted applications that were 2 years in business or longer, then right then you know that, hey, this might not be a good fit for this bank or this funding source. So if the funding source says, yeah, everything you told me about the deal in the bullet points on the deal, it makes sense that I want to look at this. So you're going to send an email to that funding source that you talked to on the phone. And don't send emails with deals to funding sources unsolicited. Don't send over an application with a write-up without having talked to them first, because a lot of them will go unnoticed. They won't get back to you. Bankers don't like getting unsolicited deals. They want to know that the deal is on its way through email and that they've talked to you about it. So I highly recommend that you speak with them first. So you send an email with the write-up, which are basically the bullet points you just went over with them on the phone. You send it over to the funding source. And a lot of times, if it is a bigger deal and it's over $75,000 and you have to put tax returns and all the other stuff that is required in the package, you are going to have to use a service like Dropbox or some other file sharing service that will allow you to put bigger files, because a lot of email services will only take 10 megabyte files. So you might have to send them a link to a shared file service, and they now have the package. Once again, you call your referral source. Hey, the deal is in our underwriting now. I should have some type of answer on it. If it's a $75,000 deal or less, most of the funding sources will turn that around very quickly, some within a day, most within a day or two. But you just call the referral source who sent you the deal. Say, hey, it's in our underwriting. I'm working on it. I'm hoping to get an approval here in the next day or so. Okay, now hopefully you get an approval, but sometimes you get a decline from the funding source. If you get a decline from the funding source, says, hey, this doesn't fit within our credit parameters, and they'll give you a reason why. What you need to do, you could see that I have an arrow going back up to start. You want to get back on the phone with other funding sources that might have an interest in the deal, and you start kind of going down through your database of funding sources that it might make more sense with. So you're going to start all over. You're going to call these funding sources. You're going to go through the bullet points, and then you're going to see if they have any interest. And if they do have interest, you send another package out to the second bank. If they approve it, fantastic. Okay, you send an approval email to the borrower. Basically says you're approved, and it gives you some language as to that everything will have to be the way that the bank, or the funding source approved it. Hey, we've funded, or we've approved this on a 36-month lease for $50,000, and this is based on, and they'll give you some criteria. The approval from the bank will typically give you a few stipulations. You include that in your approval to the borrower. You call the referral source and you say, great news, I got the deal approved. All we need to do is to get it get the documentation done on it, and we should be good to go to get this thing funded. So the funding source will then prepare the documents and send them out to you, or sometimes they have online portals that you can fill out the documents yourself. It just depends on what the funding source will require. But a lot of times the funding source will just prepare the documents and send them out to you. Some funding sources will require that they are interfacing with your customer, your end user. Most of them will protect you in the relationship, so don't be overly concerned about that. So they prepare the docs. You or your funding source go out and get the documents signed. Once you get the documents signed, you send the docs back to the funding source, and you'll put your broker invoice. And your broker invoice will be the commissions that you added into the deal on the proposal that you initially gave them way back early on in the deal when you first got the referral. But it'll be minus the performance deposit that was made out to you. So if the name of your brokerage is ABC Financial, and you picked up one monthly payment as a performance deposit for, say, $500, then your invoice will be whatever the remainder of your broker commission was minus the $500 you already paid, and you're basically invoicing the funding source, the bank or the independent lessor who is doing this deal, for the remainder of your commission. You send that in along with the documents. The funding source will typically make a phone call to the end user to make sure they call it a TV or a telephone verification. They make sure all the documents have been signed properly and they were all filled out properly, and then they will cut a check to the equipment vendor for the equipment that they've delivered, and they will also cut a check to you as the broker, and then they will do their thing as far as collecting the payments off the customer, and you're paid at that point, and you are done. You call the referral source, you thank him or her up and down for the referral. Maybe you take them out to a nice lunch or a dinner, depending on how big the deal was and how big your commission was, and you make sure that they're well appreciated for the business that they sent you. So, okay, that's pretty much it. That gives you some idea on what to expect in the deal flow of an equipment finance deal, and it allows you to kind of grasp what the deal is from beginning to end once you have a deal come in-house and gets into your pipeline, and how this business works. So hopefully you have an interest in this business. If you want to learn more, I am going to allow you to leave comments down below this video, or you can just email me at sglover@BizLoanConsultants.com. I hope that this training video helps you in deciding whether brokering business loans would be a good business or a good fit for you. And also, if you're already doing it, hopefully it'll give you a little better idea of how I feel a deal should flow through your company. So I appreciate it all. And once again, please leave me your comments or questions. Tell me what you liked about the video, what you didn't like about the video, and any questions that I might have left unanswered. I'll be glad to make sure I respond to them below. So once again, I thank you, and I hope all of you are progressing in getting started in your new entrepreneurial business, and I look forward to helping you be successful in it. Appreciate it, and I'll talk to you soon.